Well, happy Tuesday, everybody. Welcome back to Stratton Mortgage podcast here. It's been a very interesting summer months here. So let's get started off with our introductions.
Bill Seach.
Adam Bumling.
Tom Christie. So one of the first things I think we ever just sit here discussing that we wanted to kind of get out is the current refi boom that's taking place. I'm sure everybody has seen TV and a lot of, Iran issues with Iran and the Chinese trade talks have, and it's kind of cynical to say, but bad news is good news when you're trying to finance money. So the treasury market has really picked up where people jump to a safe haven. And when that happens, that lowers rates for everybody out there.
It was like a 2-year low, I think, wasn't it?
Yes, yeah. And and that's how we tell everybody, like when they're shopping for rates, you can always look that 10-year treasury market up. That's how 30-year fix is figured up.
Part of it. Yeah.
In our case, on our side here, it's we can see rates changes 3 times in one day sometimes, for the better, for the worse. So we could quote rates at 10:45 in the morning. And if that treasury market has a bunch of people are jumping into it and rates drop, well, we get better pricing. They'll reprice. They'll let us know, hey. Lucky us, rates are falling. So again, the luxury of the wholesale side
increasing. It's been bouncing around a lot lately. Like it's been down, up.
Yeah. But the good thing is even the ups are still at historic lows. Even just speaking with a friend of mine, was it last Friday? He's like, man, should I lock in? I'm like, there's other people floating. That's everybody's their decision if they want. We offer our opinions, but he was talking about trying to lock in on Friday, and sure enough, this week they dropped. So again, from our world, it just depends on how big that fluctuation is. A lot of times for us, it's, hey, here's our rate. And sometimes it gives you a credit back, and that's got to go back to you. Sometimes it can have a cost to it. It just depends on what we're trying to do.
And that could be like when we say rate drop, it might not necessarily be like the next eighth down in rate or whatever the next rate may be. It might just be, instead of getting, I'm making numbers, $55 back, you're getting $352 back or something or whatever. Yeah. So it just kind of depends, obviously, on the borrower's
needs and wants
or whatever. Or, a lot of times, some people I've talked to, like I just talked to, locked in a purchase today, said, well, what if numbers come out next week and they're lower? And I said, okay, well, you're locked in at a really low rate. What if they come in? What if it jumps higher? You know what I mean? I said, rates are. You're on a 21-day purchase contract.
Yeah,
like we don't have a whole lot of time.
Well, at this point,
21 days.
There's more to lose than gain.
With 4th of July in there.
Yeah, there's more to lose than gain. I mean, how far can they go down? Is no one knows. But
that's why I told him. I said, okay, yeah, technically, they could go down lower. I don't have the crystal ball. But you're pretty close to historic lows. You're talking about $10 difference in your payment to try and get the next eighth, or what could happen is if that data comes the other way, a lot of times it seems like they're quicker to jump up than they're quicker to jump down.
Exactly. Right? More to lose than win.
Yeah. And I was like, is it really, what if you jump up a quarter in rate versus get an extra $600 back? I was like, does that really make sense? Deal? And he's like, man, actually, that's a really good rate, which was 0.5% lower than what, because I started talking to him in October. So the rate was 0.5% lower. And he's like, this is lower. The mortgage insurance was now better than what we initially talked about too. So his payment was like over almost $170 a month lower than what we started initially talking about.
Yeah.
So I'm like, do you need to save another $2? I mean, I get it, but
and some people are gamblers. Some people are willing to say, hey, I watch this market enough where I want to float and I want to play the market. I'll tell you when I'm ready to lock in. Or some people aren't. Say, hey, this is better than I expected. Let's lock it in. Just that way they have the security of knowing like it's not gonna. This is it. Just, like,
it's in his first home. I'm like, man, this is your first home.
Yeah, and your biggest investment you're gonna make.
Yeah,
let's take advantage of what has just recently happened.
And he's more of a planner. I'm like, you know what you have. This is what your payment's gonna be. There's no surprises. Just so.
And to but with rates changing, I had one just last week I was working on, and I went in and I locked their rate in. They were one of those people like, just, hey, that's better than I was expecting. Lock it in. Well, I wasn't paying attention to the market, just busy doing the paperwork. Well, as I priced him out earlier that afternoon, and when I locked him in, it'd be in a $200 difference. You got $200 more of a credit. When I locked him in, I had called him back and say, hey, by the way, that credit's now, I think at that time it was like $400 of a credit coming back.
$600 or something. Yeah.
Whereas, he's like, things had already gotten better. We just docked the loan. So
Good for him.
Right. It's a great opportunity and
to at least look into it, because if you have a mortgage, you've definitely gotten a mailer from some lender somewhere at this point. I mean, you had to have.
Yeah.
So at least check in. We'll get you the numbers. We'll see where you're at. We'll see where you could be or what you're trying to do. And just like the math doesn't lie. It's either going to make sense or it's not, depending on what you're trying to do. And we've had some people that recently it didn't make sense to do. Hey, listen, you're in a great spot.
Yeah.
You know, you need like $2,000, $3,000 cash.
You want to refinance
There's
just to do
no
that.
sense
That's
to do
not-
that, and you're so wow.
Secondly, even if somebody really wanted to, the banks won't let us close a loan just to close a loan. If you just say, hey, I just want to skip a payment,
tangible
sorry,
benefit.
we can't refinance you. Even if you were just die hard pressed to get it done, the bank won't allow you to do that. So they protect you from yourself, even if you will. More importantly, they protect you from bad brokers just out there trying to turn people over, just who may be able to talk fast and sell something that's maybe not that great.
Yep.
But
tangible benefits, right?
it's it has to be there. There has to be a benefit to you. But it's again, right now again, a lot of people going from 28 years down to 25 years or 20 years, and that is a huge deal. You know, when you're talking about, you know, I've been in my house
Tens
for
of
1
thousands
year,
of dollars.
1 year or 2 years. And once you get around refinance, it's just like you made 5 to 7 years worth of payments on your house when you really only maybe made 2 or 3 years. And just that quickly, you can knock out that many years worth of payments. And again, that's tens, in some cases, hundreds of thousands of dollars. And
depending on how long.
a loan in Colorado I'm working on, it's a $117,000 savings.
That's insane.
Cutting his rate down. And he's at 4.25%, just so you know. Like that's how big of a difference this shorter term with lower rates doing for him.
Wow.
Over time, that's awesome. So talk a little bit about the VA Earl thing that you were doing last week too, because that was a real low one, wasn't it? That you did.
Yeah. So the VA is one of the, and again, it's only for veterans. It's not everybody can get into it, but it's a program that allows it's simply just streamlining your loan from one rate down to another, and that's really protected.
Minimal documentation.
There's no documentation. I mean, you fill out a loan application. That is it. You don't put income. There's no appraisal. You fill out a loan application and you're basically done.
Save 0.5% on your rate now, but and
that's exactly it. You're required by VA to at least drop at least 0.5%, and then you must recoup everything within 36 months. The one I'm closing tomorrow, he recoups his costs in 8 months. So I mean that's an obvious no-brainer, right? Yeah. I mean and again we got a driver's license from him, a mortgage statement, and just changed his homeowner's insurance. So I've talked to him twice. It's been that simple.
Yeah, saving money.
That's a great and that's one flyer that if you're a veteran and you're getting in a VA loan, you're definitely gotten flyers for sure.
You're getting hammered for sure.
And again it's some of these flyers I've seen are just absolutely ridiculous. I've seen them where they're
teaser rates.
And, they come back and say, well, because we can't recoup your cost enough time, now your rate's going to be this.
Yeah.
Again, because you're not allowed to charge these X amount of dollars to get a VA Earl done. It just can't happen. And again, that's to protect the veterans and the people.
They're giving they're selling the dream scenario that like 1% of the people qualify for are going to do. It's like the car advertisement, like you said, car advertisement. It's the same thing.
Yeah, and I would be anybody that's ever listened to this. How many times have you gone to a lease and you see it on TV like, oh, here's a brand new 2018 truck, $200 a month, and you get there. Who's ever walked out of that dealership with what you saw on TV?
Anybody. Yeah, it's just
It's I know.
It's a reason to get you to call.
Yeah. You get in there and it's like, well, you don't want AM FM radio. Oh, you want the Sirius? You don't want this plastic seat.
Only AM.
No windows. This car got no windows.
It's got crank downs.
So it's again just be careful what you're looking into. And again, that's why that we deliver. I tell people all the time if I tell you something, and I will personally tell somebody not to close the loan if I don't deliver it, and it'll be a waste of my own time. Same thing with you, Bill. Same with you, Adam. It's just a waste of our own time if we tell you something and don't deliver.
Right.
So it takes time away from. It doesn't do us any good because it's taking our time away from somebody who needs our help.
Yeah.
Why it just doesn't. It's just it's pointless. That time is wasted when we could be on the phone with somebody explaining something or showing them how to save money. Or even determining somebody doesn't need any help. I mean, we've gotten referrals from, hey, listen, John, it doesn't make any sense for you. Okay. A week later, one of John's buddies calls. Oh, yeah, John, he said you guys are fair and honest and looked at it. Yeah. I mean, for us, it seems to work out,
Exactly. That's But again, it's not, that's the problem is not everybody's like that. And that's where you just got to, again, make sure that you're talking to the right people, asking the right questions. I think I've said that every single episode, haven't I?
Yeah.
But it's that important. Too many times you hear horror stories about things where it's, well, we're doing this. And, the purchase I closed, she was working with another lender, and I told her more about the product he was trying to put her in than the guy did.
And we don't even have that particular product. We can't even do it. So,
and she immediately knew, like, this just doesn't seem right. And once I got on the phone with her, it was in 15 minutes. She's like, wow, I just learned way more about how this all works talking to you than they were just kind of walking around things and wouldn't answer her directly, which your biggest investment, it should not be like that. It should be cut and dry. Here it is. And again, here's the math, and it makes sense or it doesn't.
Yep. So that, I guess the refinance is kind of leading to our deals of the week a little bit. I've got some people actually moving to 15 years from 30.
Yeah.
Oh, that's
so
nice. That's huge.
Yeah, and he's appraisal waiver, no underwriting fee. He's got minimal title fees in there. But, it's done deal. Super happy. He's saving him a ton of money.
How big is the payment difference? $100 maybe?
No, it's more than that. But the lender he was with right now told him that he had to do an ARM on his cash out refinance because it wasn't eligible for Fannie Mae or Freddie Mac.
Are you kidding me?
No, I'm dead serious. And it was like just something totally bogus. So he's like, I'm obviously not going back with them. And he came by referral from somebody else who we've closed, actually another loan officer who we helped close, and said, hey, look, this is my buddy, help him out. And I'm like, yeah, I'm looking at your loan and your scenario. That's not true. Like they were basically trying to probably get a couple transactions out of him. I'm like, listen, what do you want to do? Mm-hmm. He's like, I just want to move to a 15-year. I want to get this thing paid off. He said, I might do 10. I said, well, the rate in his case was the same. Why don't you just do 15? You can pay extra, whatever.
Yeah.
Just gave him the info, get everything straight up. Said, let me know. Comes back, yeah, that sounds good. He did ask me about, we locked him in, and he asked me, he's like, well, what if rates go lower? And I said, okay, well, again, they might, but they're so low, man, and you're doing a 15-year. It's hard. Do you really want to take that chance?
Yeah. And we do have the ability to renegotiate, but at the same time, there's got to be a significant spread there because it's just it's a number that can definitely be looked at, and it's an ability. But again, right now there's more to lose than gain. That's personally we've locked it. If anybody I'm working with, they're lock it in. Take advantage of what's happening right now.
Right.
I personally I didn't see this coming. I had no idea this was going to happen right now.
So I actually got a guy where I'm going against the builder again, just like always. Battling the builders because they'll give you a free $6,000 if you go with their lender. But their rate was, one of them was 3.99, one of them was 4 1/8, and my quote was 3.375. So this guy still doesn't get that it's that much better on a $300,000 purchase.
Builders pushing the free pizza and whatever.
Well, they're pushing the free pizza, right? Yeah, and and I keep telling the guy, hey, we're going to use an outside appraiser. They're going to get you the value. If they lower it, they lower it. You save money either way, But he's balking because my cash to close is a little bit more than,
it's probably more realistic than what theirs is.
Yeah. So.
But then when you look at the payment, now that's I've been in a scenario similar to that where I've actually been in a higher rate, but this other company was actually charging more. But it's the payment. Like once that payment is so much less.
Yeah.
Now, maybe in 7 months, maybe it might not be cheap right here today, but now 7 months into the loan, now all of a sudden now I am saving money because of the rate being lower.
Well, and speaking of that, in terms of payment, and I just showed you. So now with the mortgage insurance companies, with us, some lenders have their own mortgage insurance, right? Which we had a couple months ago, which was reality better than anybody's. Now I went in there, and each different lender has their own.
They're trying to compete.
Their own mortgage insurance, like quote, if you will, from the third-party mortgage insurance companies. So we literally have to go in there and see, and they were different. Like they each were different at different lenders. So our advantage is, it's more work for us, but we got to look at each lenders, which ones are going to give the deal that we need, and then of those lenders, okay, now we got to look at the mortgage insurance too. Because one might be higher, but have a little, we got to weigh out those factors.
Right.
If you're not a broker, if you're just a straight lender, you don't have that option.
No.
This is it. This is the mortgage insurance rate. This is what the interest rate is. That's it. So that's huge.
And did your piggyback on your point of mortgage insurance? It's so many people they're fearful of it. I don't want PMI. I don't want PMI. And when I hear that dollar amount, it's like it's in some cases it's as little as $20, $30, maybe $50.
Dude, $440,000 purchase, 15% down as mortgage insurance was $48.
See, exactly.
He goes, "What?" I go, "Yeah, that's all it is." In his
insane.
case, he goes, "That's crazy." I was going worst case. I was quoting him $115 a month, and it was because of the change in the competition with the lender, it cut in half.
And something else I've found a lot of people don't realize is if you're doing a conventional loan and you carry mortgage insurance, you don't need to refinance to get that removed.
Correct.
You just that's why we always stress when we close a loan with somebody, like, you didn't buy a car. We're going to do annual checkups on this.
Yeah.
Let's check the value. Let's make sure that you're in the best situation. Most times you might be, but
I just had that conversation on the one that closed yesterday. I said, "Remember, we're going to check on this, but if rates are better and it makes sense, yes, there's a refinance option there. But you don't have to do that. If you can just get rid of the MI and there's no benefit for you to refinance, why are you going to go through that process?"
Yeah, and we'll tell you, I've done it time and time again. Hey, your best case here is keep your loan, but now let's get your mortgage insurance removed. Let's get a hold of this lender. And hey, you're at 75% or whatever it might be at that time. It's time to get that removed. And now all of a sudden your payment goes down. So, and again, let the home do the work too, and especially in the Columbus area, the way these values are rising, and then as natural payments go to the balance, that separation happens, and that's why it's so important to watch your neighborhood when you buy a house, because once that neighbor sells, there's a comp for you. That anybody that buys higher than what you did, that's helping you. So,
right.
That's a big deal. And again, like you said, $50 a month, that adds up. That's just, I tell you, hey, keep making the same payment. There's just more money to principal now. That's what you've been doing the whole time.
Right.
Yeah.
Cool.
What else we got? Anything else? I thought there was something else we were going to touch on. I can't remember. I can't remember what it was now.
How was vacation?
Good, man.
Yeah.
Good. Hot. All tanned up.
Phone ringing off the hook.
When it's 95 degrees, 100% humidity, you get tan pretty quick.
Sweat profusely.
Yeah, that's ridiculous.
Well, mine, I was on the phone every day, with work in the morning. So
I had some things
that happens.
Some things to do, but that's part of the job. But
sure.
Yeah, I guess for this episode, that may be it. But definitely, if anybody's listening and they have questions on rates or whatever, definitely give us a call. Let's look at your scenario. Let's see where you're at. We'll let you know, give you an honest assessment. Hey, you can save money, or hey, you may very well be good where you're at. If you look at some of our loans we did 2-3 years ago, they're still pretty low. They're in the low 3s on the government and stuff. So maybe they might be in a good spot. But who knows? Maybe they get rid of their MI. It's not always just about the rate itself. There could be other factors in there that may or may not change.
Yeah, if
but
you did
let us look at it for you.
You're still paying $200 a month in MI.
Yeah, you might go conventional.
And to learn this, it's literally maybe 5 minutes. It's a matter of like, hey, here's my recent mortgage statement, and again, we take it doesn't take us any time at all to look at it and say, yep, hey, here's what might be better for you, or hey, you're in a great situation, but if there is something better, that 5 minutes could be worth thousands of dollars, and you need to put that into a respect of how much you get paid per hour. What are you making a salary for your job? What if somebody said, hey, I'm going to pay you for 15 months worth of work, only a 12-month period? You would say, well, heck yeah. And you don't have to work a minute longer. Yeah. Or maybe like 5 more minutes over the course of this year, and I'm going to give you 3 more months worth of pay. Who would say no to that for 5 more minutes of work?
Right.
That's a lot of money. And you start putting in perspective of that, what I do every day for my job and how I get paid. Now I can save that money when I work. I mean, everybody works hard for their money. So we're just trying to share ideas with how to maybe go further and with using your home as an asset, not a liability.
Yep.
True.
5 minutes. That's really all. Your mortgage statement. It's really that simple. It really is.
It's honest assessment. Hey, we can help you or we can't.
Yeah, and it's math.
I mean, really,
it's the math. Again, we're not wasting anybody's time. It's either works or it doesn't. Here's the math, and you even see it for yourself. Here's why it doesn't work. Here's the math. Or hey, here's why it might work. Here's the math. So it's right there in front of you. It's not just us telling you.
Awesome.
Cool.
Well, we appreciate it. We'll talk to everybody next week.
Yep. Have a great week.
Thank you.